All right. Good morning. Good morning. Good morning. Happy CPI Tuesday. Yeah, we got our CPI numbers in, and they all came in pretty much as expected. We did have a bump to the upside on core month over month. As last month we hit 0.2%, this month we hit 0.3%, but which came in line with expectations. So it's not hugely bad, right? It is a little bad, but not real bad. But everything else came in line with expectations. We did get a little beat right here, which is good. And then your core CPI, or your not core, but your main CPI, your headline numbers, back down to 3.1%, which we knew that was going to happen. I actually thought it was going to be 3.0% last Thursday when I did the live stream, simply because of where oil is. But we knew it was going to be lower. So I think the market pretty much already priced all that in. Not Bitcoin, but as far as like your SPUs and stuff like that. You can see the S&P 500 took out not December, but March of 2022's high. March 2022's high. That's going to be, let me see here if I can pull it up real quick. Right there. So let's pull this down so you can see. That was your last major swing high once the bear market started. All right, so we knew the bear market started in January. That's when we had our initial first leg to the downside, and then this came in right here. This was that highest swing high. We did just take that out this morning, and I did put a short on just on the micro ES futures contract. You can see I got that entry right up there around where that price was. I had two contracts on. I took profits. I took one off, and I got my stop moved down about 5 points in profit. I do believe this is going to bounce. I mean, you're in an uptrend. You just made fresh breakouts and all that jazz. I don't see it selling off today, but anything is possible. If it does sell off for the rest of the day, I'll leave that position on. You can see that we are making fresh daily lows, or have made fresh daily lows on the S&P 500, but the market hasn't opened yet. We still got a good 24 minutes before the market opens. So remember, anything that happens pre-market, based on any pre-market news that we get, obviously could be, faded when the market opens. Since our first initial move before the news was higher, as we did get the breakout, and then yesterday with bullish continuation above the breakout. That's typically what you want to see. As I stated in a post on Twitter not too long ago, where was it? Right here. This was on Sunday, I think. Next week's expected move for the S&P 500. High side of the expected move is 4668, and then low side 4540. Notice the March 2022 highs. That's the last high before the all-time highs, which we've taken out. So when the SPX opens, you should open above that line right there. We should open above this line and drop. We'll see if that occurs. But the volume suggests bullish continuation. So what do I mean by that? Well, typically, if you are expecting a reversal, you want to see a lot of volume to basically tell you that's what's happening. And we didn't really get it. I mean, we've been trading at about the same volumes as we did when we made this low down in here. But the volumes that were made back when this swing low was made, you can see how the volume was increasing. That typically allows you to know that more volume is coming in as price is going higher. In a bullish market, we look for the exact opposite. I know it doesn't sound right, but you would think with prices climbing higher and higher and higher, you would expect to see more and more volume. That typically is not correct. Typically, volume comes off. It goes down as prices move higher, indicating that, most people are just buying. And when you get a jump in price like this, or jump in volume like this on a breakout candle, then that would be a little bit more worrisome. But since it didn't happen on the breakout candle, it suggests that we're going to see just bullish continuation. So we'll see when the market opens what happens. Bitcoin did come off a little bit as expected, as I've been telling people. Please don't buy up here. You are way massively overbought on the daily. You are massively overbought on the weekly. We typically get an overbought reading in the year prior to the halving. It has happened every single time on the weekly time frame, and I would expect to hold on buying up here, as you will probably get a chance to buy lower before or at or during the halving. So, is this a pullback? It is. Am I expecting it to go lower? I am. How low? I don't know. I've had about 1,527 people DM me and ask me where should they start to look to be a buyer. I don't have an answer for that. First, we got to get through December. Then we got to have a fresh yearly opening range. And then all the way over here in Q2 of 2024 is when the halving starts. You got a good 4 months before the halving gets here. 4 months. So that's a lot of price action. That's a lot of time. I did not believe, as many did, that Bitcoin was going to do this all the way over here, right? That would be like not even in the realm of possibility, in my opinion. So, worst case scenario, I would expect Q2's low to be taken out, but I don't believe that's going to happen, because if that were to happen, that would look extremely bearish, not bullish. But if you do get that move lower that far, where you take out that Q2 low, then yeah, I would probably be a buyer down there. You can see right here, this is that low that I am talking about. So Bitcoin had a nice move off the yearly open, set in a basic hammer top candle, meaning that, yeah, there could be potential move higher, but it just wasn't able to get anything going for the whole quarter, as it traded mostly sideways. But above, the previous quarter's high, we did close, but we did set in a low there. Now, if you notice, this quarter, the very next quarter, was almost an inside quarter. However, it did take out the high, and it did close lower. So a lot of people were expecting continuation down. I would have only expected continuation down if we would have closed below the low of that. So we were still bullish, still just looking for supports. So like I said, if Bitcoin were to retrace every bit of this, that would be very, very ugly on the chart. However, it would be a nice spot to look for liquidations, and also a very nice spot to look to be a buyer before or after the halving, if it were to occur. Because we do know every single time Bitcoin has had a halving, it has been a very bullish driver for Bitcoin. Now, you could watch the midpoint of this quarterly range. That could be another spot to look for potential buying opportunities. But yeah, we were looking for shorts on Sunday's live stream, the members only live stream. I literally told them that, if you want to look for shorts, start looking for shorts around daily res. And daily res basically is where it took off from. So there you go. There's daily res. If we pull up the hourly, you'll see that price pretty much stayed trading under it. So it did not give us a tag of that daily res on Sunday. So Sunday morning, when we did a live stream, it was around 11. The trade that should have been taken was here. It should have been taken here because you were still closing under hourly resistance. And I will show you hourly resistance right there. All right. Now, why is this hourly resistance? For all of you that's been following me for a very long time, it's the highest hourly candle under the daily close. Therefore, it is your intraday resistance. So at 3 p.m. Eastern Standard Time, Sunday, Bitcoin made a flawless push up to that price. That is the price at which you should have gotten short. And if you would have, nice move, because that was an 8% move to the downside. Ultimately, we took that low out yesterday and got a bounce. Now, a lot of people think that, if they caught this bullish trade here, looking for the liquidation of that low, kudos. But I would start to think about taking profits. I would. Ultimately, I believe this is going to continue to roll over and head down. Here's the S&P 500 short that I took. I don't think this is going to be a downtrending day. If it is, I'll hold on to the position. The thing is we took out the overnight lows. There is the opening candle right there. That is, you closed at 450. For the whole hour of 5 o'clock, you were closed as the cash settled. You have to have that settlement period for an hour. And then we open, and there's the daily open. There's the daily low. You can see that you did take out the low of day. So far, today's futures, on the future side, you have taken out March's high and today's low. So it can literally go anywhere from here. Today's low could perhaps be the area where it decides to find support. We won't know until we see how other assets are doing. Now, yesterday, the Magnificent Seven, which is tech, which literally is the stuff that has been propping the S&P 500 up, all of it was down yesterday. All of it was down, but the S&P 500 managed to be up. Well, the reason for that is because the S&P 500 has a lot of other sectors. It's not tech. Well, it is heavily weighted tech, but it's not the only sector. You have other sectors in the S&P 500 that need to get bullish in order to keep the S&P 500 bullish. This is what everybody's been waiting on right here. All right, you want to see this. This is all of these are yesterday's closes. All right, XLF, XLV, financial, and then XLE. Those are the four biggest sectors. XLE closed meagerly up, but healthcare closed up nicely, as well as the financial sector. So we will see how that plays out. All right. Hang on. Let me go see something really, really quick. As I haven't looked at bonds or anything, so it does look like the TLT is going to be up a little bit today. Yeah, it got a nice boost to the upside pre-market, and is moving up. So I'm going to have to close out that put position I put on it yesterday. I think it was a put. No, I think I got long. No, I did. I got long. Yeah. Let's see. Let's make sure. I can't remember half of the things that I do anymore. Yeah, I bought a $93 call. All right, good. So I'll leave that open, as I am expecting the bonds to continue higher, because, the markets are bullish and I haven't seen anything come to tell me anything different. So, things that are strong tend to stay strong, and you try to buy with the trend. So, the trend on the TLT is obviously bearish, and we got a nice bullish, the near-term trend. Long-term trend, you're bearish. But I do believe that bonds are going to kick up, as it's a nice time to buy. Being able to buy the TLTs down in the 90s, it's been a long time since you've been able to do that. In fact, the last time price was down in here was January 2011. 2011. So you're looking literally at 12 years was the last time that you could buy the TLT in this area. And the TLT mostly goes up. It's a safe haven asset. Like if you go into a money manager's office and they ask you what kind of portfolio do you want? You want a low risk but have a little bit of volatility in the portfolio? Yes. Okay. Well, 90% of that's going to be long-term bonds. That's what they're going to do. That's literally the safest way, or has been the safest assets to be in. And as you can see, with the massive rate hikes that we saw in 2022, 2023, crushed the bond market. But this will ultimately find a bottom and start to trade back to the upside. I do honestly believe, whether we have a bear market or not, whether we have a recession or not, this will be the product to be in. And you don't necessarily need to buy the shares. You can buy calls or whatever, however you want to get in it. This might not be a deep enough correction either. as if you look at the weekly, you haven't had a red weekly candle yet. Or in my or in my case, a blue one, right? The blue candles are bear candles. But whenever I say red, I mean down. As this is how everybody looks at price, usually green and red candles. All right, so yeah, that's where we currently are sitting right now. If this ends up having to be shut down for a small loss, I'll close it down and I'll look to buy lower because eventually I know this is going to find support. So why are we pulling back if everything is good? Well, you took out a major swing high, a major swing high, but you can see you're already starting to bounce back. Let's see here. Right now, I guess you're still sitting on the lows, but the market's about to open and that could change. So we'll see how it ends up playing out. A pullback would be okay. Obviously, this thing has been moving very viciously to the upside since we got October CPI. That was our last leg to the downside, and then it found support and bounced higher. Got back above all those older CPI prints. I only have this chart marked up with the CPI high of day. As you can see, as long as that high remains to be the high of day, that's where I'll keep that line. Obviously, if we make fresh daily highs, I'll move it up, right? Because I mark all the highs of day of all the CPI numbers. And there's November CPI. So we got lower than November. That's why we traded higher. And the market was expecting it. We had a nice consolidation here. This is very bullish. It's not bearish. The market was expecting it because all of that week, while it was remaining bullish or sideways after a big bullish trend, oil did what? Oil traded down. That's right. I was actually trying to short oil yesterday, but once again, I got stopped out as it had to go up there and liquidate that high first, I guess. Well, yesterday I did it, and you can see yesterday it closed up. So today ultimately would have been a better short. So I missed that trade, but that this is today's move on oil. Oil's down almost 3%, which is a nice move to the downside there on oil. Now that's basically why your market's moving higher. If oil is lower, CPI is lower. Keep that in mind. Remember, the price of per barrel of oil, a 0.2% move in the price will dictate, or a $10 move will dictate a 0.2% move in inflation. So that's just the main CPI number. That's why the Fed likes to watch core, because core leaves out the volatile energy, which is oil, and food sectors to see where inflation is really, right? Whereas the main CPI number looks heavily or more heavily on those areas. Anyways, it's good to go. Inflation did tick up just a little bit, month over month, but year over year, it came right in line. All right, right in line. 4.4%. So it is very sticky, very sticky inflation. It's not been coming down as aggressive as the Fed wants. So I'm sure the Fed is going to be acting very hawkish. When is it? Tomorrow? Let's go look. I think it's tomorrow. I think we have a Fed meeting tomorrow. I used to have this thing bookmarked, but I had to reinstall Windows to get rid of that bug. D13. Yeah, it's tomorrow. Tomorrow has a Fed rate decision. So, yeah, big stuff for this week, man. Huge stuff. They may come in very hawkish. Very hawkish. Right now, let's go look at May, because May is where it still has the fact that we're going to have a rate cut. It used to be June. The markets repriced that back down to May. But during March, there was a little bit of time. Let's see. We want right here. So a month ago, yeah, they were pricing in cuts as little as March, but they've now since backed that back to May. All right, so rate cuts, are they bullish? Are they bearish? Well, they will ultimately be bullish. That's why you got a big bullish rip right through here, because once CPI started to drop again, the markets were like, the Fed is going to pause, if not cut. And if the market, that's a bullish driver for the beginning, usually. But the Fed will only cut if something is broken or about to be broken. So they're not going to cut on either, or if CPI drops to their 2% target, the core inflation gets down to 2%, then they'll cut rates, right? And hopefully that's what happened. That's what they're going to call the Goldilocks scenario, right? Or a soft landing. The CPI cut or hiked enough, held higher for longer for just the right amount of time, and then started slowly lowering interest rates in order to avoid any nasty calamity within the marketplace. So that would not be bearish. But if they come out and they cut aggressively, then that'll be bearish. That'll be a bearish signal, and we will be looking to short the marketplace. And we will definitely be looking to get doubly up long on the TLTs. On the Mr. TLTs. What's up, everybody? Good morning. Good morning. The reason I didn't go live before the CPI print was simple. I just woke up at 8 o'clock. I overslept a little bit this morning. And I'm not necessarily, not until the Fed starts to really cut interest rates. Cutting interest rates is bearish. It's going to be bearish for the dollar. A higher interest rate environment is bullish for the dollar. So it's going to be a difficult read based on the fact that we did get that higher monthly tick on month over month core. It was what was expected, right? So it's not a miss or a beat or anything. But if you look at last month's was lower. So you would typically want to see this come in at 0.2% or 0.1%, not higher. So that's the one main thing right there that could be a little bit bullish for the dollar, and as well as just the CPI 0.1% tick up. They're in green. So usually whenever these numbers are green, that usually means bullish for the dollar. So you got two little bullish for the dollar things there, but instead of the dollar being bullish, the dollar had a massive pullback all the way back down to 2023 yearly opening range, ticked that level to almost perfectness, and then bounced. Let's go inside the day and look. There you go. Big move to the downside, hit 2023 yearly opening range. Didn't really liquidate as much as just a few days there, price action. She didn't take out that low there. Nothing says that you have to in order for it to go higher. I'm just making an observation. So the dollar's basically trading sideways after a few days of bullishness. And then we had this big down day here. So it's chopping sideways. It makes trading a difficult endeavor whenever it's doing that, unless you're watching support and resistance levels like you should be for your entries. You should only be looking to take entries at resistance and longs at support. The longer that the euro sits here, the better it's going to look for upside bullishness, but the euro's not doing as good. I mean, the eurozone is not doing as good as America is, as far as inflation and as far as potential recession. So the dollar could get bullish based on that also. And the dollar can rally with risk. Risk assets and the dollar can rally together. So it's going to be a trader's market, which it has pretty much been for most of 2022. It's been a trader's market. We have had, or 2023, sorry. We have had downside moves. We have had upside moves. That's a trader's market. But you could also have been just a long only investor at the beginning of the year. Now we have a fresh yearly open coming up, and a lot of people are wondering, what does that mean? What are we going to do? Well, obviously, we got to wait for that to happen first. We still got half of December to trade still. And I'm not quite sure as to, how it's going to play out because I can't see into the future. But as long as inflation stays, lower than 4%, the core inflation that is, and I don't see any reason why the markets would get bearish all of a sudden, right? Inflation is what drives the marketplace. It was what drove the marketplace lower, and essentially it's what's going to drive the marketplace higher. So we'll see. Do we end up getting a downtrend day today, or does this thing find a low and start to move higher? Now, as far as your daily expected move for today, it had a lot more risk priced in today because of CPI. So this was your daily expected high, this blue line there. This is your daily expected low. Your weekly expected moves are down here. There is your weekly expected move to the downside as far as the options market is concerned. And there is your upper expected move for the week. So I basically just move these blue lines up or down depending on what the S&P 500 is calling for day by day. And I do it at the close, right? Today's the 12th. It was expecting a much higher move than that at before the open. I can't remember exactly here. Let me see. Let's pull up the calculator as I should still have it. 45. So yeah, the marketplace was pricing in a $28 move for today. $28. That's $28 from yesterday's close. $28 up or $28 down. That's how the expected move works. All right. Obviously, this is a much wider range than $28, but at the same time, if it's looking to tag that box, there is a lot of downside that can come out of that. So I still have one contract short. I will leave that contract short. I'm actually going to drop the take or the stop loss a little bit lower, as right now I have it setting at 5 points. And that's typically what you try to strive for on the S&Ps. You generally want to try to get 10 points a day, and you want to do that in 2 trades or whatever. If you can get 10 points in one trade, you had a fantastic day. Since my entry is at 46.41 and we're trading at 46.15, you can see I obviously did much better than 10 points today. But I have not been doing good. Have not been doing so good the last few weeks. All right, on the small account. The large account is still good. It's still up multiples of percents, but this one's still, I'm having a little bit of trouble getting this thing moving. I need to pay more attention to it. So right there, P&L on the day for this. I don't know why it says $158. Oh, that's because I took profits. So this is the P&L that's open. So clearly I have to move that down a lot lower, because if it comes all the way back up to my stop loss, then I'm only going to have about $30 on the day. The PSTG trade is still not working out. PayPal trade is still kind of working out, but it's been fluctuating between up and down. TLT's just barely up, and then this XLF short is down. Yeah, so that's that. Let's come over here and get back over to the trade tab, and let me move my stop loss down much lower. All right, so that would give me 28.41. That's still quite a few points there. Or I just might outright close it if we get back down. This black line is the midpoint. That's where we closed Friday's session. All right, so that's like the middle of the weekly expected range. So might just see this one more move down here until buyers step back up. And then again, there just might be too much selling occurring based on the fact that you liquidated March 2022's high. A lot of people setting up there willing to sell up there. But we'll see here. 21 would be 20 points. 2150 would be 20 points. So let's move it down to 2150. Right there. 2150, that'd be 20 points on the day. That'd be a fantastic day of trade for the S&P mini or the micro contract. So yeah, that's doing good. I also have a short on Bitcoin at hourly supply. Let me show you that. But it's not a great entry because Bitcoin isn't trading away from it just yet. I'm not expecting a huge move out of Bitcoin today because we got a huge move out of Bitcoin yesterday, an 8% down day. Generally, when you get big down moves like this, you get small intraday moves like this, and then the next day or the day after, you will potentially get that downside continuation. If the Fed is extremely hawkish tomorrow, that could cause another expansion lower. So going intraday, I got my entry off right about here. So you can see I am watching it very, very closely as this is not very far away from near-term price, right? At any point, this thing could turn around and go right back up to my entry, which I have my stop loss setting just below my entry. Just enough to cover fees. 41,910. Oh, here, I'll put it in now. I thought I already did, but I didn't. We'll set that there at 49.10. That way, if Bitcoin decides to rally, at least I won't lose money even based on fees. But I am expecting more pullback, lower prices. I'm expecting Bitcoin to pull back probably for the majority of the rest of the month. I just don't know how big of a pullback you're going to get or what you're going to see. I just knew that, once you get to the point to where you're seeing exhaustion, and then exhaustion, you had bearish divergence going on. You had all kinds of things going on there. And then the weekly is the main thing, right? The weekly. So there still could be an ultimate setup here for a short side play on Bitcoin if we are able to make a bearish divergence. Now, what would have to happen to be bearish divergence is you would need to close a weekly lower, then close a weekly higher than this close, right? Like up in there. And then you want to see the RSI lower than 83.25. If that occurs, then you will have that weekly bearish div, and that could be the better play. You might not get it. I'm not saying that that's what's going to happen. I'm just saying it has happened in the past. It has actually happened here. It gave us a nice, massive bullish divergence signal. And I can show you that there. I also posted that on Twitter as well. I even made a little joke about it. From the Sixth Sense, I see dead people. I just simply said I see divergence. A bullish div there on the weekly. Yeah, and it took a long time for that to play out, didn't it? Many weeks. You made that low there in June, and this low was set in November. So a few months there to make bearish divergence or bullish divergence. I don't think you're going to take a few months to make bearish divergence. So we'll see what happened. Bitcoin damn near hit the open of last week's candle. Now that is a pretty decent area to watch for bounces, as the open doesn't have a wick, right? It's just a straight open and go. When you do that, those are typically pretty good areas to look for small bounce, intraday bounce plays or whatnot, right? We'll see if it can get down there this week or not, and then we'll see if it bounces from there or not. If you do try to buy it at 39,976 or whatever the opening price is, let's get the exact price, 39,984. Of course, this is on Coinbase's exchange, but we take the trades on weeks. There is a link in the description. I am no longer trading at BitGet as they will not allow me to trade there anymore. So, I mean, they wanted me to spend a few $100s to get some kind of card or whatever, but I'm not going to do that. Not as long as I can trade for free on weeks. So, weeks is if you want to trade in on weeks, there is a description. If you do use that, or a link in the description, if you do use that link, it will save you 20% on all trading fees. Okay? You don't have to. If you're on an exchange already and you're still able to trade, I wouldn't worry about it. But if you don't have an exchange and you want to trade, there you go. All right, moving on. All right, we already looked at Euro USD. It's hard to get a good view on it, but if dollar gets bullish, then obviously we'd expect bearish euro. Parity is all the way down here. That's not exactly parity. It used to be. What the hell happened? There's par. Parity's a long ways away. I was kind of expecting it, and it still could get there. But if it does, then that means the dollar is going to be bullish. And the reason why the dollar could be bullish and we could see risk assets still rise is because the dollar is like the cleanest dirty shirt in the laundry, if you will, right? The cleanest dirty shirt in the laundry. It just means like if you were going to put your money in a currency, which one would you do it, right? Which one is the better one out of all of them? Well, that's easy enough. Just go to the currency futes and look. Right now, Swiss franc is a decent one, right? As it has basically been trending up, holding its value pretty good for a long, long, long time. Euro, however, not so much. I mean, not so much. This thing has been in a downtrend for a very long time. The same goes for the pound. Just massive downtrend for a very long time. Japanese yen isn't even in contention. I mean, we have the BOJ next week. So they did say that they were probably going to stop their yield curve control or whatever. But they were just talking. There's nothing set in stone yet. And we won't know for sure until we get the BOJ meeting. Once we get the BOJ meeting, if they do say that, that they're going to try to raise interest rates for the first time in 20 years, then that will be bullish for the Japanese yen. It would be very bullish for the yen. But until then, until we get that and actually see them go into action, then this is still a bearish asset. Canadian dollar, same thing. I mean, it's been holding its value from around 83 down to 68. That's a pretty big gap. New Zealand straight down, Aussie pretty much, sideways, but almost down. So I mean, that's what I'm saying. The DXY is the better looking currency as far as putting your money. So I mean, all currency sucks. All of it does. There are better assets to put your money in my opinion, but as far as currencies goes, the dollar's the cleanest dirty shirt in the laundry. And that's why you could potentially see a bullish run on the DXY, even though risk assets are still moving to the upside. As you can see there, the dollar is moving higher. SPX still moving lower. Let's see if we took out that. Nope, we did not. Wait, did we take it out yesterday? No. So the SPX did not do what I said I figured it would do, which would be gap higher. The reason for that is because the S&P 500 futures have already moved to the downside. What was the expected move? Does anybody remember? $28. So when this gets to around 28, That would be like the low end. But remember, as of right now, after the open, they have $18 as the expected move to the downside. So when this hits negative 18, that could be the low of the day. We shall see. Let's go back to the Magnificent Seven, see what's happening over there. Are things opening up down? Yeah. So Apple gapped down yesterday, had a push down, but recovered at the day, but was still down because it goes from the previous day's close. So you just basically opened a little bit lower than yesterday's open. You're pushing down a little bit. Amazon is actually up on the day compared to yesterday's open. Meta up on the day just a very little bit, but the day is young. Let's go intraday and look at some of these things. Yeah, yesterday Meta had a pretty decent down move, recovered half of that, and pretty much opened in the same region. Google, nice move up, then down. So Google's been coming off a little bit. We'll see if this thing can't find support somewhere. Microsoft down. Let's go look at. I don't like this part. I like to watch the actual index. But yesterday, all of these things were red. But still, somehow, the NASDAQ was able to be bullish. It was a very strange trading day. That's why I was kind of looking for shorts today. Like, why would you be so bullish even though the majority of your assets are bearish? So the advanced decline line is not really telling us a whole lot. Oracle down big, down 10.5%. That's why these look so small. But there you go. You got 42 advancing, 57 declining. In order for me to be really bearish on the market, I need to see 10 to 15 advancing and 85 to 90 declining. If I see that, then that's a pretty good signal for a bearish day. And yesterday, this was bullish, really bullish. So we'll see how that plays out. Bitcoin is getting a slight move to the downside. So that trade is working out pretty decent now. We'll go take a look at it. Nice little move lower here. This is my entry. Not a fantastic entry, but like I said, I was unable to get in at hourly res because I was a little bit too late for the entry. A little bit too late. So I went ahead and took it as it passed back through supply there. And we're getting a move down. So we have taken out the first support. We haven't taken it out on a closing basis, but we are trading under it. That's nice. And I would definitely love to see that support taken out as well, as that would be, good for the short position. And then the SPOOs still trading down. These are 10-minute candles, but it does look like it has potentially found a near-term bottom. Let me pull up the charts over there. What a move, man. What a freaking move. So what do we got for the high there? 645. We're trading at 615. That's a big move on the S&Ps. That is a big move. Let me get the flexible grid up. Get it situated. And we did have a contract change, so these prices are not in line with the prices on the other. You can see that this says 46.67. That's because we had a change of contract. We went from the December to March contract. Oil is just, man, what a lower there. Can't believe that we missed that trade. I know if everybody missed it, I know I missed it. Oxum has been doing really good trading oil. I mean, been absolutely wrecking it. Been all over it. And I don't know if he was able to get short this morning or not. All right, let's see what's going on over here. Good morning. Good morning. What's up? What's happening? Everybody's doing good stuff, hopefully. Sup, King, Master, Boss, Ruler. Wow. Kneel beneath me. Yeah, right. Good stuff, man. How you doing, Sloth Bag? What's up, Brandon? Crypto trades and techs in the house, or was at least. Thank you for showing up, my friend. I really appreciate it. Potential DXY support if gets to daily high or a bit above. DXY support if it gets to the daily high or above. Let me see what you're talking about here. Here, let's get off of this chart and get on a chart where we can actually read it, where I don't have all those stupid lines in there. Well, it would be resistance, not support. Bullish closes are resistance. Bullish daily closes are resistance. And bearish daily closes are support. Okay? So maybe you meant resistance but said support. I do it all the time. I get supply and demand mixed up all the time. Even though I know exactly what both of them are, I still get them mixed up. I do the same with support and resistance. It happens. But yeah, you do got resistance coming in around 104.15. That's going to be your highest daily bullish close there. So in order to see upside continuation, you would definitely need to see a closure above that. That has been where the dollar has struggled to close above. So yeah, it doesn't look great. I mean, I really don't care what the dollar does one way or the other. You know what I mean? It doesn't matter to me. The only thing I care about is making money. Like I'm not in love with any asset. I'm not in love with any asset. The only reason I am even in the asset, holding the asset, or shorting the asset is to make money. It's not how I feel about the asset. Like, because I'm short Bitcoin, that doesn't make me a Bitcoin bear, right? I am uber Bitcoin bull for the long term, like 15, 20 years out. I think Bitcoin will be trading higher than it is now. That's my opinion, because that's what it has done its entire life. And as long as, you continue to have a halving, as long as the thing works out the way it's supposed to work out, then it should continue to rise over time. But it's extremely volatile. The more people that get involved with Bitcoin, however, would slow the volatility down a lot. That would be fantastic. But I don't know if that'll ever happen. A lot of adoption has already taken place, but you got to understand something. Even though Bitcoin has ripped almost 200% this year, let's see, what was it from the lows? Almost, yeah, 167%. So that's doubling your money plus almost, that's 1.5 your money, really. Bitcoin engagement is still really big down. Like, it's hugely down. When Bitcoin was ripping back here, back in 2020, 2021, the engagement for Bitcoin bulls was just insane. Like, you could just post Bitcoin up on Twitter and get 300 likes out of it, even if you only had 100 followers. Like, now everybody got burned. You know what I mean? So many people got burned on this move lower here. They're done. Those people will probably never come back to Bitcoin ever. But, if it starts to rip another bear market, makes fresh all-time highs, I do believe it'll pull some people back in. But I just don't think you're going to get that overall, like, I mean, some people were getting, small channels were getting 1,000 people per day in a live stream. Small channels, like channels just getting started, would have so many people in the live stream, it would be insanely crazy. But you just don't have that engagement this time around. But the halving hasn't happened yet. So that's typically the way it works, right? You get late in the 4-year cycle, which we are, as we're getting ready to have a new one, right? So you're late in the 4-year cycle. Right here's where the next 4-year cycle begins. We'll see how it plays out. NASDAQ pushing a little bit lower today. NASDAQ made a high of 16,548, but remember that the change of futures contracts had it higher, which will look like a massive gap up, but it is not a gap up. It's just that's the way futures works. All right. All right, so questions. Looking for entries on Barrick Gold daily. Suggestions would be appreciated. I don't know what Barrick Gold is. Can you give me a ticker? I mean, I can do gold, but I don't know Barrick Gold. Gold is getting crushed. And you don't want to see that after making fresh all-time highs. That's not what we want to see. Like, you want to see this thing rip after making fresh all-time highs. You want to see bullish continuation. You don't want to see this. This is not good. This is actually quite ugly on gold. You are at a daily support, but whether or not that daily support holds, it's going to be a dollar story. If the dollar remains bullish, then gold will probably go low. If the dollar rolls over, then gold will probably find support, right? I do know that there for a while, gold was very bullish, very bullish. If this day right here didn't tell you something, then I don't know what would, right? But obviously, I would have told you to wait for a pullback, and you just got a very small one, very small pullback before it took off again. So, gold is one of those things, but I don't like this. This does not look good to me. This looks like a lot of people just sold what they had and said, screw it. Maybe it finds support and starts to go higher. Like if what's happening right now in the Middle East continues to get worse and worse, and that could potentially put a bit under gold. But I really and truly thought that gold was going to go much higher. This is very surprising to me. Very surprising. But P, if you can give me a ticker for Barrett Gold or whatever, Barrick Gold, I will look at it for you. Good morning, Mr. Tom. Too bad, looks like the DXY already selling off again. Yeah. It's bullish right now, but it says it's down, which is weird. It's actually up on the day. The open is right there. So you got to get under that open in order to be down. So I don't know what's going on with this. But yeah, I mean, if you think it's going to go down, then you could trade it by buying support on the euro. But that would be a scary buy, wouldn't it? Seeing those big red hourlies coming in hot. It's a lot of momentum. But it doesn't mean anything because on a news day, like I said, at the open, everything that happened pre-market